Good afternoon, Ian. A Thursday afternoon edition of the Incast.
Hey, yep. How's it going?
Good. How are you?
Great. Thank you.
And you know that given the market action yesterday, which is Wednesday, Tuesday, and generally the mood of foreboding, people want us to talk about the stock market.
Yep. Yeah.
Be ready. And as you have seen, anytime we bring up the stock market, we are forced to bring up Apple stock. And there's a lot of feeling about Apple stock among our viewer base on YouTube, and actually even among our subscriber base on Bull Profits.
Yeah. And obviously, we've gotten a lot of criticism over what we've said about Apple, which is that, their days are really numbered of their stock going higher. And, it's kind of strange. I've never seen that much pushback on really any stock. Maybe Tesla will get you some hate in the comments if you say either good or bad about that. But I've seen so much like on Twitter, not even from what we've said about Apple, but people like getting in arguments about like what other people say Apple is topped out, or, they're doing literally, if you say they're doing anything wrong, you kind of get slammed.
Right. And I put up a tweet saying that, listen, I know many people disagree with my view on Apple. However, it's my role, it's our role, Ian and I's role, to ultimately give you our sense and our understanding based on the facts as we see it, rather than to try to find a way to agree with what you might think or to agree with everything that's out there. And we are definitively not trying to be contrarian for the sake of being contrarian on Apple. I mean, we laid out in our Death Star video on Apple a very, very plausible case based on real facts, real evidence as to what is unfolding at Apple with respect to its stock, with respect to its buybacks. And then there's any amount of anecdotal commentary that's out there about whether or not Apple is doing really anything with their business.
Yeah, exactly. Yeah, it's kind of strange, to see a company that's worth $2 trillion, mostly, fueled by their own buybacks and Warren Buffett buying in and things like that. So, I mean, it's all about supply and demand. And when the demand runs out, the two main sources of demand was Apple itself and Warren Buffett. And Warren Buffett, I don't think he's really buying much anymore. And the buybacks have to stop at some point. So it's tough to see like who would pick up the extra demand, which, would not be good for the stock price.
There's two other things that I wrote in my tweet. Second is there must be a way for people, whether it be on Apple or any other stock, or truthfully on anything, for reasonable people to disagree without animosity. The likelihood of everyone agreeing on everything, or that I'm required to agree with anyone's view on Apple, listen, it's just our view. And Apple is a near $2 trillion stock. Anything that we say with our YouTube channel, with the viewership we have, has zero impact on the stock.
Right. Yeah.
Zero impact on the stock. So the idea that we are putting out these videos to try and move the stock, influence the stock is really, truthfully, it's impossible, because this is probably the world's biggest stock. The liquidity in the stock is in the hundreds of billions of dollars. The idea that we can do anything to influence the direction of Apple is genuinely laughable.
Yeah, I mean, I take it as a compliment. I think we're that big.
Well, there's another reason why we brought up Apple, is that it leads to a bigger issue, which we were talking about, which is about this issue of the stock market versus the market of stocks. And I'm just going to lay out what the media talks to people about and what people think is the stock market and why this matters. People talk about the stock market, Ian, as if it being the Dow, which is a price-weighted index. In other words, as the stock prices move around a great deal, it can be bounced around a great deal. It's very unique in this. It's a very kind of naive, simplistic way. But it for a long period of time, it did capture the sort of direction of the economy and the direction of many private companies for a long time. However, I would say the Dow is almost completely irrelevant today to some extent.
Yeah, I agree. But you see it, of course, being pushed around as like big headlines, like the Dow dropped 1,000 points or whatever. But yeah, the companies in there, for the most part, are, pretty archaic technology that's not really in the leader position in any industry anymore.
Right. And then the second thing that's considered to be the market is the S&P 500, which is a collection basket portfolio of 500 of the largest companies that trade in the United States. And if you go and look at the top five, it's Apple, it's then Microsoft, then Amazon, Google, and Facebook. And these five companies represent nearly a quarter of this index. In other words, five companies represent nearly 25%, and the remaining 495 companies represent 75%. The vast majority have weights of like 0.3%, 0.6%. Apple is at 6%. Microsoft is also somewhere near 6%. And then the others are 3%, 4%, 5%. In other words, the S&P 500 is swinging around based on largely the price movements of five companies. And yet people make judgments about our economy, about our markets, about the financial health of the country, sometimes the world, based on these movements, Ian.
Yeah, exactly. So one way to distinguish that from the actual market of stocks, by that I mean just all stocks in general. One way to distinguish between what's going on in the S&P and the market as a whole is by looking at the equal weight S&P, which the ticker symbol for that is RSP. And yesterday, for example, the S&P 500, the market cap weighted was down, I think like 0.5% more than RSP. So that's like a clear effect of those five companies having a drag effect on the overall index. And of course, when people see that the indexes are red or like down like a few percent, they're gonna, they might panic sell other stocks that aren't affected at all. And of course, there's also like algorithmic traders that will make a program to say sell if the S&P is down whatever percent. So it can have, an effect on the smaller stocks when it's actually happening. But when stuff starts to rebound, those market or those equal weighted versions of the indices are going to rebound first. And that's what we saw yesterday, meaning Wednesday. Yeah.
You're right. And there's no way that this viewpoint of the market being these indices and the dominance of those five stocks extends to the NASDAQ composite, extends the NASDAQ 100. It does not extend to stocks that exclude it, like, for example, small cap indices and mid cap indices. And we would tell you that I believe there's going to be a fracturing moment in terms of perception where the Dow, the S&P 500, and even to some extent the NASDAQ composite, even though the NASDAQ composite has a lot more representation, certainly of fourth industrial revolution companies, America 2.0 companies, they're also still dominated by these five companies. And the NASDAQ 100, where people will stop viewing these things as being representative of the market for stocks and off stocks.
Yeah, exactly. And of course, when all that money flows out of the big five stocks that you mentioned, that's like hundreds of billions of dollars that's come out of those companies over the past couple months. Really, the stock split of Apple was the top for a lot of these. And since then, like I said, hundreds of billions of dollars have come out of these companies. And that's what's going to kind of fuel the smaller companies. All that money has to go somewhere. And really, there's no better opportunity right now than like high growth, innovative companies, because we're seeing like every industry be disrupted. And that's where we believe that money is going to go. And that's why we call it the Apple Death Star, because they're basically, indirectly funding smaller, more innovative, higher growth stocks.
Yeah, and I went back and have done this work a few times, which is that essentially Apple announces a stock split on July 31st, and the stock split actually happens on September 1st, and a day later is when Apple peaks, and that's also when the S&P 500 peaks, the cap-weighted version peaks. And the NASDAQ, because it does have a much higher semiconductor representation, others, is able to continue higher, even though it's got Apple and Microsoft and others, the other weights. There are other companies that are big enough in the composite to carry that to new highs. However, given what the S&P 500 is currently constituted with, which is these big five representing nearly 25%, and then there's the issue of the S&P 500 and then the Dow really having below those five companies, it's dominated by so many sectors, Ian, that have no hope. They're done. They're done. I mean, for example, yesterday I put up a tweet saying like since the peak, which was in 2014, July 2014, ExxonMobil stock is down 60%.
Yeah.
60%, Ian. And you can do something like that for Wells Fargo. And I believe in the next 1, 2, 3 years, you will be able to do that for other banks, et cetera. And you will see at some point in they go through this, what I call a waterfall decline. In other words, there's no bid at anywhere near the current prices for that stock. And you have to keep being willing to take lower and lower prices, which is what creates that waterfall effect, which if you look at stock prices of ExxonMobil, Wells Fargo, and we believe over time, many other companies that are currently represented in the S&P 500, you're going to experience that.
Yeah, exactly. So yeah, to put that in perspective, Exxon was, I think, the biggest stock in the market just 7 years ago. And now I don't even think they're in like the top, maybe top 20, top 25. And yeah, it can change very fast. And, the beginning is always like a slow meltdown. And then it just takes like one big sell-off to like make these companies totally like irreversible, basically, because they're being disrupted so much. The same thing happened with GE. They were one time the biggest stock in the market, and I believe they're still in the Dow. But they basically have just like flatlined ever since they made that huge drop.
Yeah, GE was actually thrown out of the Dow so like in a couple of years ago. But nonetheless, you go through the Dow, and I went through the Dow. I mean, truthfully, the best companies there are Apple and Microsoft, and then I believe Salesforce is now in there. Salesforce is an America 2.0, fourth industrial revolution company, so that one's there. However, the rest of it is very America 1.0.
Yeah, absolutely.
I mean, really America 1.0. And some of you who have watched my America 2.0 presentation may be wondering, like, well, Paul, you said the Dow is going to go to 100,000. Well, the truth is that the Dow, its constitution changes over time. Like you go back even 30, 40 years ago, the Dow was made up of completely different components than what currently exists. So what we are expecting over time is that you will see companies that today are probably higher end of mid, maybe even sort of near large, like, companies like NVIDIA should be in the Dow.
Yeah, for sure. Yeah, there's so many that are now like, hundreds of billions of dollars that aren't in the Dow, and they're America 2.0 companies. I would say that Tesla is another one, of course.
Yeah, Tesla is another one. AMD should be in the Dow.
Yeah.
I mean, because this is now the dominant chip company with the best chips, the fastest chips, the ones that are being implemented in every kind of solution, they should be in the Dow. And we can think of others that should be in the Dow that are going to dominate their sector, or else they essentially are creating a new sector, and they are the best representative of it. However, the nature of these committees that select the stocks for the Dow or the S&P 500 is they tend to be very backward looking. If you were to guess, Ian, when would you think Apple was put into the Dow?
I think it was just a couple of years ago.
You're right. Yeah, I mean, it was something that was seen as being too risky.
Yeah.
Really, even if several years after the iPhone was released, it was seen as too risky.
Yeah.
So given that, who knows when Tesla will get put into either the Dow or the S&P 500.
I know. Yeah. They're going to keep, growing their product lines, and they're always going to be too risky.
Right. I mean, hopefully it'll be before they completely, have dominated. However, past history suggests that the committees will wait far too long. And then you look at what they've recently added. I mean, they added Salesforce. However, Salesforce has been around for like a decade.
Yeah. And I'm surprised like Amazon's not in there. They've dominated e-commerce for like a long time now.
That's right. Amazon is not in there. Google is not in there. Yeah. Facebook is not in there. So it's a little bit crazy that now we're using what is a very unrepresented basket of stocks, whether it be in the Dow, whether it be in the S&P 500, to judge the health of the market of stocks. And people continue to represent this as being the stock market.
Yeah. Exactly. And also in Amazon's case, like 2/3 of the GDP is consumerism. So, I mean, Amazon is the best gauge of that. So it really makes no sense if it's supposed to gauge the economy.
Right. And so on a day like yesterday, when the Dow is down 3%, and of course, it feels like a little bit like the same sort of, kind of setup scenario, a little bit that you and we've now experienced this at least 2 or 3 times, where it does look like the algorithmic traders try and get the futures contract associated with the Dow is easiest to manipulate and move. So they hit that in the overnight market, which is thin.
Right.
Yeah, and then that generates the overnight headlines. So if you can hit that overnight, it doesn't take that much money to do it. In other words, you relentlessly sell it so that you get it down a few hundred points. Eventually, some journalists on Market Watch will report that. Obviously, we report it around the world. Now, if Europe buys into this idea that Dow is actually representative of U.S. markets, they will now start to sell maybe the S&P 500 contract. Certainly during March, this setup was very much in play.
Yeah, it was crazy. And the indices were getting like halted overnight, and then they'd open up like 6% lower. Yeah, that was insane. And it happened like, it was kind of like the snowball effect, like you were saying. It went from the Dow with not that much money selling it to like all over the world.
Yeah, I mean, the S&P 500 contract is hard to move because it's very liquid.
Yeah.
And it's like literally billions and billions of dollars. Oh, the Dow contract is easy to move. And we have noticed it definitely seems to be part of a deliberate strategy that you knock down the Dow and then you get that one to kind of stimulate a snowball selling effect that they're hoping will transmit itself to the S&P 500, then the NASDAQ. And that was kind of in play yesterday.
Yeah, exactly. And that's why it was helpful to have those equal weighted indices. So the fact that they weren't down as much as the mainstream ones was a great sign. And also, just to throw some information about options in here, call options, which people bet on stocks moves with, when they buy call options, they're betting on basically the stock price to go up in the short term. That rebounded huge on Tuesday and Wednesday. So it bottomed out on Monday, the first day that the market went down. But even as the market was going down Tuesday and Wednesday, people were buying more calls on individual stocks, especially America 2.0 stocks, which is a great sign that people expect a rebound in the short term.
I can also tell you that our amazing colleague, Patrick Goodrich, who tracks our portfolios, so we track our equal weighted portfolios for all of our services daily. And I can tell you that this focus on fourth industrial revolution, America 2.0 stocks meant that while the Dow, the S&P 500 were down 3% plus, the NASDAQ was down, generally our portfolios were down only really like a couple of percent. And we saw a number of stocks within those portfolios actually up and seeing active bids.
Yeah, exactly. That's what we've seen for every single kind of market correction going all the way back to March when we had the crash. Stuff started rebounding like a week in advance, like e-commerce, things like that. So the same kind of sectors have been going up and during the market going down, and that's been the best signal that I've seen for the whole year, really.
Yeah, I put up another tweet saying that, hey, there's never been a more important or critical time to really be aware of what kind of stock that you own. Like you are going to see more and more examples of what is happening with Wells Fargo, with ExxonMobil. And you have to really be vetting your portfolio for fourth industrial revolution, America 2.0 stocks, because I believe many of these other stocks are going to stagnate at first and then just go into deep decline.
Yeah, exactly. That's the pattern. That's what we saw with GE and Exxon.
And I wonder if you saw the note that Kathy Wood from ARK Invest, who's incredible, and we sometimes recommend their ETFs in our Bull Profits Daily, and we would tell you to make sure you subscribe to our free e-letter Bull Profits Daily, where Ian, myself, Amber, and our entire team, we write on a regular basis on fourth industrial revolution stocks, America 2.0. She was talking about how in her career, she has never seen innovation so cheap in the public markets, and then contrasts it to how expensive, relatively speaking, it is in the private markets.
Exactly. Yeah, we've talked about this before, how like some stocks that are worth like maybe $100 million market cap, it's like that would be well over a billion. You know, if it was private, it'd be a unicorn, and money would be like, you know, they'd have to be turning people down for investment. So yeah, it's a very very strange kind of thing going on between private and public markets. That's going to get sorted out because a lot of those private companies are now going public, and they're seeing, you know, that the same level of demand in the public market too.
Right, and which is why we would tell you that this is the moment really to get more fourth industrial revolution stocks, America 2.0 stocks. And the way to do that, well, Ian mentioned, you know, the S&P 500 equal weighted index, which the ticker symbol is RSP. The other way is to own small cap. And you could own the Russell 3000, which has an ETF, which the ticker symbol is IWM. There's any number of other small cap ETFs you can own, or you could own the ARK Invest ETF, ARKK, right, Ian?
Yeah.
Yeah. We can also say this a moment that we plug our services. If you want actual stocks, you want to invest in single stocks versus an ETF, where you might have stocks that are a little bit lagged, consider our services, and there'll be a link to Profits Unlimited, which is our flagship sort of introductory service that goes for $49 to $99 to subscribe to that. So, I mean, what's the market action that's going on is really also unrepresentative of the economy, Ian.
Yeah, exactly. That's what I keep hearing. And, you know, especially the Dow, like I said, with all these America 1.0 companies, like old pharma, old banks, oil, things like that. Yeah, it's kind of crazy that's still being seen as like an indicator of the economy. Meanwhile, you've got all these other stocks like cloud software, solar, semiconductors, things like that have gone up like hundreds of percent this year.
Right. I mean, and then even on a macro basis, the idea that you can use the S&P 500 to think that it's telling you anything about the US economy today is somewhat preposterous.
Yeah.
Because we track housing, and we know that housing is perhaps the critical factor for the US economy, and housing is on fire.
Absolutely. Yeah. I mean, there's been a housing shortage for a while now, and even with like lockdowns and everything, companies were still seeing like 50% growth over the past year with home sales. So there's a bunch of things playing into that. There's millennials moving out, there's people moving out of cities, and there's of course a shortage of homes because during the real estate crisis, after that bubble burst, all the home builders basically stopped building homes. So now they've got a lot of catching up to do, and there's excess demand on top of that. And as a result, we're seeing these companies grow like 40 to 70 or even more percent year over year. And the ETF to get into that is ITB. That's a great ETF to take advantage of home building. And I've actually tweeted a bunch of stuff about recent earnings calls from home builders. And they're like, it's the most bullish outlook I've ever seen from like any entire sector ever.
That's right. And we would tell you that that is in many ways home building, household formation is the crux around which the US economy is built around, because the moment you buy a home, as you know, Ian, you start to spend a lot of money.
Oh yeah, for sure. And that's why things like, you know, Wayfair, online furniture, online, you know, big ticket items, those stocks have taken off too. And everybody is kind of surprised by that, but that's how people are buying things nowadays. And when you have a bunch of people buying a new house, those are going to see a huge benefit as well.
All right. And so this idea that if if iPhone sales go down and if that brings down the S&P 500, many people might think, well, that must mean that the economy is in trouble. However, it just means that Apple's phones or sales are lesser than what people expect. They have a lot of competition. They have done very little in terms of innovation. It means very little in terms of the overall health of the US economy.
Yeah, exactly. So that's really the key difference between the market and the economy. I mean, if the S&P 500 had, you know, more innovative America 2.0 companies at the top, it would be a better reflection.
I mean, the reality is, Ian, that for about 20 years, really post the 2000 top, the public markets, the stock markets have been mostly unsupportive of innovation companies. They've been
Yeah.
unwilling to support their valuations, unwilling to support their secondaries. And so that activity then shifted into the private sphere. And I believe we're in the middle of that transitioning back. And so this is a great opportunity to be into innovation-based companies, growth based companies and opportunity-based companies, which are generally much smaller in the mid to small space, which is where we at Bold Profits and all of our publications are completely laser focused on.
Yep, 100%.
All right, we've done the stock market. We do want to iterate that we are bullish, optimistic, positive, BOP, as I like to say on Twitter, on Fourth Industrial Revolution stocks, on America 2.0 stocks, and we are definitively not bullish, not optimistic, and not positive on America 1.0 because we can see their decline beginning to accelerate. And we would tell you that there is some great peril in some of those stocks. There may be volatility in our stocks, but there's actual peril in those other stocks, Ian.
Exactly. Yeah. And, by definition, America 2.0 stocks might be more volatile. You might see bigger price swings in the short term, but it's where, you're going to see the higher gains too.
And let's now transition to Bitcoin, which has now officially, I believe, hit a 2-year high. I believe it has passed marginally the peak that it hit in 2019, and all sorts of headlines now coming out about Bitcoin.
Yeah, I saw, speaking of America 1.0, I saw that JP Morgan is now bullish on Bitcoin, which is like super ironic because they spent a lot of time bashing it before. They actually started their own blockchain and then they sold it and then they bought the company that they sold it to. So they've like had some weird flip-flop position on Bitcoin. And you're seeing more of that. The people that were really skeptical are now bullish. And you also see America 2.0 supporting it. MicroStrategy and Square are a couple examples of that. So, I mean, demand is like strong across the board right now for Bitcoin.
Yeah, and you know what MicroStrategy, as you mentioned, has put $425 million into Bitcoin, and 425 million.
Yeah.
And they somehow were able to do that without bidding the stock up. So they must have some very good Bitcoin traders.
Yeah, I know. I saw that their CEO owns like 200 some million of Bitcoin too. So that's like a huge chunk of it.
Right. And so, I mean, what one does, eventually others are going to do, especially as they see that I believe MicroStrategy is going to be rewarded by the market if their call is right. And with that, additional people will now view putting crypto, not just Bitcoin, however, the store of value coins, once Bitcoin starts to get to a certain point where people feel like, oh, well, I want to own more than one, that will draw a bid really across crypto.
Yeah, absolutely. And we've seen this before, like when Bitcoin rallies, it tends to suck some market cap out of other smaller coins. And then that money, people are still buying Bitcoin, but they're willing to buy other more risky cryptocurrencies as well, like more startup projects. So eventually, it's going to be good for the entire crypto space. But the fact that Bitcoin is doing what it's doing right now is very bullish. I think it just it ended last week at a price that has not been seen since I think January 2018. So it was almost a 3-year high for the weekly close last week.
Yeah, and that Ian and I have called for Bitcoin to hit 50,000 this year. We've been given a hard time by people saying, "Hey, Paul, get real. There's only 2 months left." However, you can see, I mean, essentially in March of this year, Bitcoin was at 3,800 at the crash low. It's now at 13,500. It's clearly, there's clearly a huge amount of money bubbling underneath to buy Bitcoin. The big whales continue to buy, whether it be Grayscale, the Cash App, where you can buy Bitcoin very easily. Now, companies are joining in and putting their cash money into Bitcoin. I saw a European firm, I forget the name, our colleague Patrick put up this news story saying, I think they put something like 25 million into Bitcoin. So it's starting to now transmit itself around the world.
Yeah, exactly. And Grayscale is obviously a huge buyer too. And that's a good gauge on institutional investors' demand because that's where like the accredited investors and big hedge funds go to buy Bitcoin is through Grayscale. And this month alone, I think they've bought almost 30,000 Bitcoin. So it's, demand has never really been stronger at this point from big buyers, from institutions, hedge funds. We've never seen anything like this.
That's right. So, I mean, there's three factors that really have driven our call for Bitcoin to hit 50,000 this year. Maybe we'll miss it. Maybe we'll make it. Even if we miss it, we would say we are well on track for Bitcoin to hit 100,000 plus, we believe, in next year.
Oh yeah, for sure. I'm saying 115,000 by August of next year.
Right, and our stretch target, if you will, which comes from me, is for Bitcoin to go to about 250,000, $250,000 in sort of, I would say, 2023 territory is where I would say there are folks that are calling for that next year. I'll just be safer and say 2023, something in that time frame, $250,000 for each Bitcoin, which I'm sure we'll definitely get some heat for in the comments below.
Yeah, I'm sure. Yeah.
And just so folks understand, like Bitcoin right now is sucking a lot of the liquidity for crypto. However, as it starts to get to its new high, it very naturally is going to draw more capital into the crypto space. And then you also will see Ethereum start to rise as well.
Yep.
And then some of the other bigger currencies, which are Bitcoin Cash, Litecoin, Ripple, Lumens. I'm trying to think of what the others.
There are a few. There's like EOS is one,
Right.
Cardano, but they're kind of different. The ones you said are pretty much, in that group of like the core original crypto.
Right. And so we are bullish, optimistic, positive on crypto pretty much across the board. We believe it is going to take market capitalizations price value from gold and other stores of tangible value that people have trusted in the past and is going to shift into Bitcoin, other crypto. Then from the vast majority of the world's currencies, Ian, which like have been junk, have always been junk, get inflated away. And it finally gives people something, as long as you have a phone, you can carry Bitcoin anywhere.
Exactly. And one of the places that I find really valuable is this website called Useful Tulips. It shows you peer-to-peer Bitcoin sales, which is like the main form of buying internationally. And those are through the roof right now too. So you're seeing countries with, crazy inflation in their currencies, and Bitcoin volumes are higher than ever. People are getting, they're putting a lot of faith in Bitcoin. So it's not just big companies buying Bitcoin. It's not just people buying it for a speculative reason, but it's a lot of people too buying it because it's way more stable than their currency.
Yeah, and that's with Bitcoin's crazy volatility as people consider it.
Yeah.
I can tell you, being from India, Ian, I can tell you that when my father was alive, it was always a struggle as to what to leave his money in. In other words, the Indian currency, the rupee, was so terrible as a store of value that people in India would either buy gold or land. Those were the two things that you could buy. Bitcoin is a genuine alternative for people in India or any place where their currencies have been really terrible, pretty much, since the beginning of time. It gives them a real alternative.
Yeah, for sure. And that's another source of demand that we didn't even mention, but that's super important also.
Right. And then this treasury function, which we were expected, in other words, for Bitcoin and many other cryptos to really start to take the roles that various things currently have in the financial system. It might be short-term treasuries or things like that, stores of value that people keep cash in. Bitcoin is going to start to take market share from them too.
Yeah, exactly. And the financial industry as a whole is worth $90 trillion. So crypto is going to take, more and more of that as time goes on. And there's basically an endless supply of money that is going to be going into crypto from financial, the entire America 1.0 infrastructure of finance.
Banks, insurance companies, all of these things. Since we've done quite a lot on the stock market and crypto, quickly just want to mention Tesla. So they released their full self-driving beta. So this is actually a car that can actually navigate, I'd say 65. This is going by YouTube videos. It's a limited release. I'd say it's like almost 70% self-driving,
Yeah,
something like that.
yeah. It's the most, AI sort of product on the market right now, like by far. Nobody else really has something like that, and I think it's pretty amazing what they've been able to do.
And then the thing that's so insane about Tesla is that so Tesla's self-driving autopilot, whatever you want to call it, does not use maps. They use a neural network engine, and
Yeah,
they simulate based on driver behavior, based on situation. And in other words, as this now goes into wider and wider release, the rate at which this is going to improve is just going to skyrocket.
yeah, for sure. And I mean, that's the smart thing to do, because you've got some places that, people hardly drive, and when someone does drive there, it's not going to know what to do. So it's pretty genius that they went with that direction.
Right.
And like you said, the more people use the service and the more people drive Teslas, the better it's going to get.
Yeah, and that means that it's robotaxi business, which many people think that Elon's just kidding around about or somehow joking about. That's going to start to become a reality. And now people are really going to start to price that into the stock.
Yeah, exactly. Which is a relatively new idea too. So there might be some big upside there when they do start to release this robotaxi kind of industry, just from Tesla itself. So I do think that is going to be like a huge part of their company within the next few years, and it's something that obviously nobody else is even talking about at this point.
That's right. I mean, there's other folks, obviously Waymo, which is from Google, which does have a project out in Arizona, which is completely self-driving, no driver. However, it is map dependent. Now, I mean, I have a lot of respect for Google's computing abilities and their abilities. I feel like Google will find a solution. And then Uber is also out there as the other third potential leader of this transition. And we've seen studies that suggest that public transportation will be wiped out.
Yeah.
It will reorder the way regional transportation occurs, short flights. No one is going to want to go drive to an airport, go through the horrible experience of going to an airport for a 1 hour flight. If you can just get in your car, and for the total time frame that you would take to actually, get on the plane, get off the plane, get from an airport to wherever you need to, it'd be much easier just to get into a self-driving car. So there's a lot of change coming to the transportation system that very few people really, other than us and Kathy Wood, are focusing on, and where a lot of existing businesses are just going to be wiped out the way Amazon wiped out Macy's and Sears and all these businesses.
Exactly. And it would also be a way for people to make some extra money, because you'd be able to basically rent out your car. You can use it for the taxi service while you're at home. Otherwise, it would just be sitting in your driveway. So that's another possibility with that.
That's right. It takes an asset that largely sits there doing nothing and makes it into something productive already. And we have gone on very, very long, so we need to bring this to an end. We are still bullish on the stock market. However, we want to tell you that, hey, when you see the indices going up and down, just consider that is unrepresentative of the market of stocks or the economy. Bitcoin, we've covered, and Tesla we covered. Cannabis we'll do next week, Ian. So you say goodbye first, and then I will say goodbye.
All right, everybody. Thank you so much for watching. Happy Friday and have a great weekend.
Now, I want to tell you to subscribe to the channel, give this video a thumbs up if you enjoyed it, and give us comments on anything that we've said and any questions that you have. And until next week, this is Paul saying bye.